Hi, Julia.
Hey, Sarah.
How are you?
I'm good. How are you?
Are you excited to talk about insurance today?
I'm so excited.
Awesome. So welcome to No Dumb Questions. This is the Insurify podcast for straight talk on insurance coverage, claims, and savings. And I'm Sarah.
And I'm Julia. And today we are taking on a big one. What is full coverage car insurance?
And I can't even tell you how many times I've had people ask me, is full coverage even worth it? Or what does it mean? So we're going to cover everything.
Yes. And full coverage can actually be a really good investment, but it's important to know what it includes and if it's right for you.
For sure. So we're going to break down all the parts of full coverage, what's included, what's not, when it's worth paying for.
Yes. And we're going to clear up some myths because there are a lot and give you guys some real advice on how to choose the right amount of protection for you.
All right, let's get this show on the road.
Okay, so first thing to know is that full coverage isn't a single policy. It's actually a bundle. It's multiple policies.
Yeah, so there's the core trio, which is your liability insurance, which, as you guys know, covers others if you cause a crash, but not your car. Then the full coverage part comes in with collision, which covers your car if you hit a vehicle or object. And the next part is comprehensive, which covers non-crash damage, so like theft, vandalism, weather damage, animals, falling objects, etc.
Yeah, exactly. There are some additional terms you'll see with full coverage. It sometimes depends on your state or just your policy. So some of those are personal injury protection, which you may see as PIP or PIP. That will cover medical bills and lost wages regardless of fault. So regardless of who caused the accident. And it is required in some states. So that you might have to have that on your policy if you're in a certain state. And then there's medical payments coverage, often called MedPay for short. That helps with medical bills, but has kind of a smaller scope than PIP.
Yeah.
And it's sometimes required, but usually optional. And then one that you will see in a lot of states, and even if it's not required, it's usually a good idea, is uninsured or underinsured motorist coverage. And this protects you if the other driver doesn't have or has too little insurance. Yeah. For example, like if they cause a crash, their liability insurance should theoretically kick in. But if they don't have that, then that kind of coverage for your policy would help cover that cost.
Exactly. And then you'll see some other common coverages that aren't usually state mandated. So this is going to be gap insurance. Gap insurance covers the difference between your loan or lease balance and the car's actual cash value if it's totaled. So when you drive your car off the lot, it starts losing value. That's depreciation. Your insurance company is going to pay out the depreciated value if you total your car. If you already have a very big loan, the depreciated value doesn't cover that loan. Then that's where gap insurance comes in.
That can be so helpful.
Yeah.
Yeah.
The next is roadside assistance. That's like jumps, tows, lockout help. Accident forgiveness, so your rates won't go up after your first minor at-fault accident. And then rental reimbursement. So if your car is damaged and it's in the shop, your insurance will pay for a rental car. So the key point here is full coverage is commonly liability, collision, and comprehensive, with sometimes extras of uninsured or underinsured motorist coverage and PIP or MedPay. But then the definite extras, which won't ever be required by your state, are roadside assistance, accident forgiveness, rental, gap. So always check your quote or your policy when you're getting a quote, because sometimes they'll include like roadside assistance or rental car coverage, which will inflate your quote when maybe you don't need that. So it's always worth giving a check to see what's included.
Exactly. And I think just to translate, basically full doesn't always mean complete. So that's why Sarah's talking about like really reading those details.
Yeah. So now that we're familiar with some terms, let's get into what full coverage means in the real world and then how to save on your policy.
Let's do it. All right. So what is full coverage? Do you need it? And how do you keep it affordable?
Yeah. So full coverage protects your car against accidents, thefts, storms, and your finances when you're at fault. It's not required by law. It is often required by lenders and leasing companies if you have a loan. It doesn't include gap insurance, accident forgiveness, roadside assistance, or rental reimbursement. And it doesn't cover wear and tear and maintenance. So oil changes. If you drive over a nail and it pops your tire, your battery dies, roadside assistance would help with that. But full coverage isn't going to pay for your tire replacement or your oil change.
Exactly. And yeah, to be clear, roadside assistance will help you if you're on the side of the road because your battery dies. It won't replace your battery worry and pay for that.
Yes.
Yeah, necessarily. Okay, let's look at a little bit of a cost snapshot. So according to Insurify data right now, the average cost of full coverage car insurance is around $213 a month, which equals about $2,500 a year. But costs vary widely, like really widely, by driver profile, where you live, what car you drive, whether you've had any claims in the past. And it is really, really, really up to everyone's individual circumstances.
Yeah. For sure. So here's when full coverage might be worth it. And again, up to everyone's profile, right? So if you have a newer or financed vehicle, you have a large loan, you can't afford to replace or repair your car out of pocket. And I mean major repairs, not minor repairs. You live in a higher risk environment. So an environment that has high theft rates, has severe weather, dense traffic. So Los Angeles is a really good example of how your full coverage rate can vary by your city. So the average right now in LA for full coverage, according to Insurify data, is $311 per month. So this is because LA has a lot of traffic and a lot of congestion. Everyone knows about Los Angeles traffic. You're more likely to get into an accident. A car is more likely to hit you if you park on the street. And then a wildfire could damage your car, and full coverage can help pay for that damage. So the Palisades, Eaton, and Hearst wildfires destroyed over 6,000 cars. And full coverage can really help in those situations.
Exactly. And that's why rates would be a little bit higher, because there's more risk that can lead to higher rates. So just to clarify. But yeah, so it's not always worth it. So here are some times when maybe it might not be worth it, even though it really does, it kind of is up to what's going to work for you. So maybe you store your vehicle, or you don't really drive it very much. That means you're not on the road as much. It may not be worth it to carry that coverage because you don't have as much risk. Maybe you're a student at school. You keep your car at home. Maybe you're deployed and you're storing your car somewhere. If you have an older car or just a lower value car that you can afford to replace, that's important, then maybe this might not be worth it for you. But can afford to replace I just want to highlight that, because even if you have an older car, if you can't afford to replace it, get full coverage. It's cheaper than replacing it usually. And usually that's the piece of math where if your insurance is going to cost more than it would to replace your car, that's the kind of thing. But usually if it's of value to you to have that vehicle and you can't afford to replace it right now, have full coverage just to have that peace of mind. And then, like I was just saying, so the annual cost of collision or comprehensive is more than you'd get in a total payout. This is usually for much older vehicles, because again, the average annual cost of full coverage is around $2,500. So the cost would have to be lower than that. So if your car is worth less than that and you can afford to replace it, then it might not be worth it to have full coverage and pay for that extra protection. But once again, it's really unique and up to your individual circumstances.
So let's get into a real world lens. I'll use my car. I'm going to consider my car's value, my commute reliance, my local climate risks, and my parking situation, and my comfort with risk. So my car, I have a loan, so I'm required to have full coverage. But if I didn't have a loan, here's what I would do. I have a newer car with a current depreciated value of $19,000. I drive to work. I could take the train, but I needed to get to other important places. My climate risks are falling branches from trees, hail, snowstorms, and heavy rain. My parking situation, I park on the street, which poses a pretty big risk. So the value of my car, plus my commuting needs, plus my parking situation, plus I can't afford to replace it right now, means that I'm going to go with full coverage.
Yes. Oh, so that's so real. Thank you for sharing that. I have a very similar situation, just a much older car. So again, I'm going to be considering my car value, commute reliance, climate risks, parking situation. I park on the street as well, and my comfort with risk. So here's the deal with my car. I have an older car. It's completely paid off, has over 100,000 miles and still kicking. The current depreciated value is around $3,500. Yeah. She's old. But I use it a lot. I use it to commute. I drive to work. Like Sarah, I could take the train, but I often use it to commute to events, other things, other important places, my family, etc. And there are definitely some climate risks here. There could be a falling branch from a tree, hail, snowstorms, heavy rain, right, wind and all of that. And like I said, I park on the street, and I actually have had my car hit before just being parked on the street by a poor truck trying to navigate the really small streets in my neighborhood. So for me, the math does work out to having full coverage, because even though my car is older and not worth a whole lot. I need to commute. And I don't have a buy a car fund all saved up right now. And the value of my car is still higher than the annual cost of full coverage to insure it. So for me, it's worth it.
Yeah, important to weigh your pros and cons because everyone's going to be different.
Yeah, exactly. But it's really important to find affordable full coverage because, again, like, why would we go for this thing if we can't afford it? Like, we're really trying to make those smart decisions to help out our budgets, right? Okay, so a few ways we're going to talk through this are you can compare quotes. We really stress this because even though it might kind of sound obvious, it's kind of the like money you're leaving on the table, right? You don't know what you don't know. So if you compare quotes, then you will know either you have the best deal, you already got it, or there's a better deal out there and it could save you money. Yeah. Like it's kind of a win-win. But always when you compare, we really recommend that you're keeping an eye out for those extras that we talked about a little earlier, because you want to make sure you're comparing apples to apples. So not a policy with rental reimbursement to one that doesn't have it, etc. Right? And then you're definitely going to want to ask about discounts or just do your research. What do you qualify for? You could get lower rates if you're a safe driver, if you're insuring multiple cars, if you don't drive much, again, you have like lower mileage. And even for like really small things like going paperless or paying on auto pay, whether it's every 6 months, every month, like often you can get a small discount for that, which is kind of easy. Another way to save on premiums is to consider a higher deductible. We talked a little bit about this in some of the past episodes, but just remember there that you don't want to choose a higher deductible than you can afford to pay, because that is what you have to pay out of pocket if you file a claim before you are reimbursed for that damage. So just keep that in mind. And then kind of some of the things that are kind of running habits are to drive safe, have a clean driving record. People with clean driving records definitely get to save a lot on premiums. Yes. So drive safe if you can. Avoid lapses in insurance. So that just means like stay insured. Yes. Because when you have a lapse, sometimes that can kick up your rates. And then as you're able, maintain good credit. You know what I mean? It can also help you either earn a discount or just get quoted lower rates.
For sure. All right, let's get into some frequently asked questions. All right, Julia, are you ready to be grilled?
I'm so ready. Let's go.
So does full coverage cover everything?
No, full coverage does not cover everything. Remember, full, not complete. So it does not cover routine maintenance, wear and tear, or mechanical breakdowns. It's for covered losses like accidents, theft, and disasters.
All right. What's the difference between liability-only insurance and full coverage insurance?
Yes. It's kind of in the name a little, which is helpful. So liability insurance is liability only. So basically it covers others when you are at fault. So damage to someone else's car, covering costs for someone else's injuries, whereas full coverage includes liability, but it also includes collision and comprehensive coverage that will cover your car, often plus those optional add-ons.
How much does full coverage cost on average?
So right now, it costs about $213 a month, according to Insurify data. That's the U.S. average, so keep that in mind because your rate is going to really depend on where you live, the car you drive, your driving record, your claims history, and in many states, also your credit history.
Is full coverage legally required?
No, full coverage is not legally required. Liability insurance is the legal minimum. However, most people do need full coverage because a lot of people are driving cars that they're either leasing or they've bought on a loan. And often lenders and lessors will require full coverage while you owe money on the car.
Can I get cheap car insurance with full coverage?
So it depends. There are definitely strategies to make it more affordable. What is cheap really varies depending on who you are, of course. We recommend stacking discounts, so really doing your research on what you qualify for, comparing lots of quotes, so really casting a wide net, as they say, raising your deductible responsibly, again, doing the math on whether that's something you can afford, and keeping a clean record, so driving safe. But I will say that it's very unlikely it will ever be cheaper than just liability insurance because, in essence, offers more coverage, meaning insurers are taking on a greater risk, and that's what you're then paying for. So it's unlikely you'll find full coverage at quite the same level as liability-only rates. But again, it really depends on where you are.
Does full coverage include gap insurance?
Not automatically. Gap is usually an optional add-on, but we recommend adding it if you owe more than the car's value. But always ask about that. It's not a fit for everyone, but it can be a really great fit for some.
Yes.
Yeah.
can I drop my full coverage?
That depends on your situation. So if you own your car outright, if it's yours, then yes, you could. But again, we recommend really thinking about factors like the car's age, the car's value, and your budget. Are you comfortable self-insuring repairs and paying for those and covering replacements? If you have a loan on your car, if you lease your car, nope, you probably can't drop full coverage because that's something that contract requires. But every time your car insurance comes up for renewal, just kind of reevaluate. Yeah. Think about it, see how your needs have changed, and you can make adjustments at that time.
Perfect. Great job.
Thank you.
All right, we'll be back after this short break.
Julia, are you tired of paying too much for your car insurance?
Yeah, who isn't?
Well, here's a straight talk. With Insurify, you can compare quotes from over 120 top insurance companies, all in one place. And you could save up to $1,100 a year, and it only takes about 10 minutes.
No phone calls? No hidden fees? It's 100% online and it's completely free?
Yep. Insurify has already helped more than 10 million people compare, including us. Now it's your turn to see how much you could save.
Click the link in the description to get started today.
All right, Sarah, it's time to bust some myths. Are you ready?
I'm so ready.
Amazing. Okay. Myth or fact? Full coverage replaces my car for what I paid.
Mostly myth. The payouts are going to be based on your actual cash value, which is the depreciated value of your car, not the purchase price. So like we mentioned earlier, the second you drive your car off the lot, it starts to depreciate. Gap insurance can help fill in the loan lease difference. But if you owe more on your car than it's worth, that means you're underwater on your loan and you should probably consider gap insurance.
Exactly. Thanks for explaining that. Okay. Myth or fact? All insurers define full coverage the same way.
This is a myth, so the contents vary, so you always want to verify what's included in your coverages and limits. So when I was personally comparing quotes, I got a really high quote and I was like, hey, what's in that? And they had included rental car reimbursement and roadside assistance. But the second time I went to compare quotes, that wasn't included. So my quote was definitely lower.
Myth or fact? Full coverage is expensive.
Part myth, part fact. Like we said, it's going to cost more than liability, but you can make it more affordable by comparing quotes and using discounts and keeping your record clean.
Okay, myth or fact, full coverage automatically includes extras like rental reimbursement and roadside assistance.
Usually fact, some policies bundle them, others sell them as add-ons. So you want to check your policy details or ask an agent what's included. Like I said earlier, like one had it included, one didn't. So you want to make sure you know what's in your quote.
Yeah, definitely wouldn't assume automatic on anything. Always read that policy. You know,
yes.
Always want to make sure you know what you're signing up for. Myth or fact, full coverage protects me from uninsured drivers by default.
This is a myth. So you're going to need uninsured motorist or underinsured motorist coverage to be protected against drivers without insurance. It's required in a good handful of states. Honestly, in my opinion, is a worthwhile coverage to have, even if it's not required.
Yeah, I agree. Okay, myth or fact, I can lower my full coverage rate without cutting coverage.
Fact, definitely, yeah. So safer driving, shopping for quotes, discount stacking, keeping your credit healthy where you can, and higher deductibles that you can afford can help reduce your premiums.
You're so wicked smart, Sarah.
Oh my gosh, thank you.
All right, let's get into your action plan so you can be wicked smart too.
Let's do it.
Okay, let's build your action plan so that you can be saving some money on full coverage insurance. All right, so first, figure out if you even need full coverage. So you're going to consider your car's value. You're going to consider how much risk you're comfortable taking on in terms of how much money. You're going to think about your environment, where you live, where you park, whether there are any severe weather risks like hail, hurricane, wildfires, et cetera, that you want to be protected against. And of course, you're going to have to consider whether you have a loan or a lease that requires you to have that coverage.
Yes. So now that you've decided what you want and you've gone through your profile, here's how you're going to get cheap full coverage. So first, you're going to get 3 to 5 quotes with the same limits and deductibles.
Ask about add-ons for sure, and add or take away any that you don't need or want.
And you're going to apply any eligible discounts. Make sure you ask about them because they're not always advertised. Consider higher deductibles on your collision and comprehensive coverage if you can afford the upfront cost.
Yes. And pick the policy that balances protection and price.
Definitely. And you want to recheck at every renewal and update it after life changes. So if you move to a safer area, if you get a new job, if you pay off your loan, if you turn a certain age, you can qualify for different things. Like we've said, everyone's profile is different. So always be checking those quotes.
Yes, agreed. All right. Is it time to wrap this up?
Let's wrap it up.
Amazing. So the bottom line is that full coverage means more protection, but everyone is different.
Yeah, think of it like a combo meal.
Oh my God, I love this. Okay.
Liability only is just like a burger.
Just a plain burger?
Just a plain burger.
Okay.
Full coverage is the burger plus the fries and a drink.
That sounded real good.
Full meal, yeah.
Oh, I'm hungry.
And then the dessert is like gap insurance, roadside assistance, accident forgiveness.
See, I like the full meal over here.
I like the full meal.
Sounds real good. And if you live in a higher risk area or really rely on your car, it's often worth it.
Yeah, and compare smartly, add what you need and skip what you don't.
Okay, that's it for today's episode of No Dumb Questions.
Thank you all for joining us. Don't forget to subscribe and share with a friend who's also tired of paying too much for insurance.
And who isn't? Send us your questions using the link below.
Until next time, drive safe and save money.
You are listening to No Dumb Questions, an Insurify podcast. This content does not constitute personalized financial or legal advice. This podcast is written, edited, produced, and recorded by Sarah Getman, Julia Taliesin, Riley Hines, and Sydney Harrell. Compare insurance quotes by clicking the link below.